Everyone, Adam Bergman here, tax attorney, IRA Financial. Hope everyone's doing well. Appreciate you guys staying with me on this emergency Ask Adam. It's been a crazy last week. So I wanted to go through the Ways and Means proposed tax bill, and there's a lot of important tax provisions here. But I obviously wanted to focus on the ones that relate to self-directed IRAs, 401ks, and retirement accounts, and there are a few. Just as a way of background, our industry, we have lobbyists. We are well aware. Do I have some? I hope you guys can hear me. I just saw there's some issues with the sound, but hopefully you guys can hear me well. As I mentioned, we have a very good industry. We have a group of lobbyists. We are always in touch with members on the Hill, both Democrats and Republicans, and we were aware of a cap that could potentially make it into this bill, and I spoke about that on various Adam Talk podcasts. But these two provisions, which I will get into, the one on Accredited Investor and the one on the 10% owner / officer, we did not see. There was no warning. Okay, so the last week's been crazy. I've never spoke to so many members of Congress, senators on both sides, lobbyists. I wish, trust me, this is not fun. This is not something I wanted to do. But the beautiful thing is our industry is united. We are focused on educating members of Congress, especially Democrats, especially on the Ways and Means, to educate them about the importance of self-directed IRAs, the importance of having investment options, the importance of using your retirement account to help small businesses grow, to help businesses raise money in America so they can employ more people. And that's what we do, and that's something we're certainly very proud to be a part of as an industry. So just let me preface what the next hour or so, this is not a commentary on Democrats or Republicans. This is not a political commentary. This is not a political contest. This is about reality. This is about the proposed House Ways and Means bill, and the goal is to educate all of you so you can educate your members of Congress or your senators in your jurisdiction. Hopefully one or two of their tax policy folks will be watching or listening, and they could also be educated about exactly the impact these provisions will have, not just on retirement investors, but all Americans, and especially small businesses. So before I got started and focused on the retirement provisions, I wanted to focus and just summarize some of the key tax-related provisions. Now I'm going to go through the tax-related provisions quite quickly, but if there are questions, please leave them in chat. I also received probably 75 questions over the last day or so from clients and friends, so I will try to do my best to get to them, as well as the clients, the questions and comments you are leaving now. If we can't get it all done in an hour, I'll do another one towards the end of this week, and also do an update to inform you if there's any developments, and I'll also give you my thoughts. So let's get right to this. Top summary of the key Ways and Means tax proposals. Individual tax rate is going to go up to 39.6 from 37%. It's pretty much expected. There is going to be an additional 3% surcharge for those earning over $5 million a year, and this replaced the step up in basis, which I did a bunch of podcasts on. A lot of people were concerned that this bill would eliminate the step up in basis on death. It did not do that. It instead added a 3% surcharge tax for those earning over $5 million. It's also going to increase the capital gains tax rate from 20 to 25, which we'll see is actually 28.8 because of the 3.8% surcharge on investment income for certain taxpayers. The net investment tax of 3.8% simply apply to passive income like capital gains for those earning over $250 now. It will be expanded to include pass-through income for those earning over $450 married filed jointly. So if you had a pass-through entity, that pass-through income will also be subject to a 3.8% tax in a lot of cases. So that's a pretty big change. The unified tax credit, which is the foundation of the estate tax, it is now 11.7 per individual, 23.4 per family. It's going down to $5 million per individual. This starts in 2022, not in 2021, so it's not going to be backdated, so you do have a chance to do some estate planning. And the corporate tax rate will go from 21 to 26.5%. Now let me talk about or summarize the key retirement-related provisions, and then we'll get into some details. Number one, there's a cap now, at least proposed, on not just Roth IRAs, but all IRAs and 401ks in the aggregate. So if you have more than $10 million in your IRA or 401k, not including defined benefit plans, by the way, just defined contribution in IRAs, Roth IRAs, SEP, Simple, all together in the aggregate, if it's more than $10 million bucks, and this is important, and you have more than $450,000 of income, married, filed jointly, or $400,000 of income if you're single, the cap applies. That means once you have more than 10 million bucks, you're going to have 2 years to get rid of the excess amount by way of a 50% distribution each year. So if you have less than 400 or 450 if you're married, the cap does not apply to you. So somehow if you have more than 10 million bucks in your IRA or 401k and you have less than 450,000 if you're married, the cap will not apply. But it will kick in if you have a year where your income is above that threshold. Their idea, at least, is, hey, we're not targeting everyday Americans. Even if you have a big IRA, if you have a lot of money, you're going to have the cap. If you don't earn a lot of money, no cap. There's not a lot of details in terms of how the taxation will work. I got a lot of questions on this. For example, Roth IRAs. I spoke to someone today who converted $11 million a few years ago in an IRA to Roth. So he paid tax on that. What's going to happen now? He has over 10 million. What happens? So the idea is that whatever you paid in tax on the Roth will not be subject to tax when you pull out if it's over 10, but the earnings on that Roth could be subject to tax, potentially not a 10% early distribution penalty. So yes, it's unfair. I agree. It's changing the games. It's changing the rules in the middle of the game. Using a football analogy, it's going from 4 downs to 2 downs with in the fourth quarter. No one's been notified of this. It's not fair. They're not looking forward only, they're going back. Why are they going back? Guess what? They want to go after Mr. Peter Thiel, who's really the catalyst for all this, right? He is the person. He is the main person that is the reason a lot of this retirement legislation, especially on caps, originated. The ProPublica article back in June 2021, where information was leaked from the IRS to ProPublica, which focused on Peter Thiel and his supposedly $5 billion in Roth IRAs that started with several thousands, which he was able to grow through investments in PayPal, Palantir, and Facebook, as well as now other investments, of course. And that started the snowball from rolling down the hill and just kind of led us to where we are now. And he is the poster child for rich, obnoxious people that are abusing retirement accounts. Now, does it help that he was a major supporter of President Trump? Does it help that he's supporting Republican senator and congressmen in elections? No, right? Let's be honest, this is also politics. For whatever it's worth, he was a major supporter of President Trump. Okay, all the way back in 2016, he donated $1 million to President Trump. He was one of the few in Silicon Valley that supported the president, and that's just the bottom line. An enemy, a friend of your enemy is your friend, but an enemy, a friend of your enemy is also an enemy, right? So they say an enemy of your enemy is a friend, but a friend of your enemy is an enemy. And he is a friend of President Trump, and he is now an enemy of a lot of Democrats. And that's just the bottom line. Is this just political theater? I'm not sure. But the fact is, he was a major supporter of President Trump and continues to support various Republican candidates in primaries. So they're going to take a lot of money away from Mr. Thiel, assuming he has $5 billion in a Roth, and he's under 59.5. He's I think 53. I mean, he's going to owe tax on $4.9 or so billion over 2 years. So yeah, he'll be able to take some of that out in Roth, assuming he has some Roth contributions, which I don't think he has much of. So guess what? He's going to owe a lot of income tax on $4.9 billion over 2 years, and that's going to make a lot of Democrats very, very happy. So that's where it starts. It all starts at the cap. Our industry is essentially conceding the cap. There's less than 500 Americans that have more than 25 million in retirement accounts, IRAs and Roth. There's about 28,000 Americans that have more than 5 million in an IRA, Roth and IRA included, including SEPs. So we're not talking of a lot of people. There's 350 million Americans. Again, less than 500 have more than 25 million, around 28,000 have more than 5 million. Right? There's also something called time value of money. Of course, the amount of wealth in this country is going to grow. Based off the principles of compounded returns, every 8 years your money grows. So the Democrats and Senator Wyden said, look at the amount of growth in IRAs since 2011. It's unbelievable. Well, of course, the IRAs are going to grow, and they're going to continue to grow, no matter who's president, because of the time value of money. Plus, we've also had a bull market over the last several years that's also accelerated retirement accounts, whether they're invested in stocks or real estate. So the mega backdoor Roth IRA, which we know is let's start with the backdoor Roth. The backdoor Roth IRA will be eliminated only if you have income over that 4 or 450 threshold. So if you make $200,000, you can still do backdoor Roth IRAs of $6,000 or $7,000. The mega backdoor Roth for 401ks will be eliminated, irrespective of income. So the ability to put away $58,000 or $64,500 in a 401k solo plan, that will be gone, unfortunately. So it is what it is. They want to do that. Again, it's not raising any revenue. These are after-tax contributions to Roth. This is going to hurt small business owners. Who sets up solo 401ks? Small business owners. Who is this going to hurt? Small business owners. It's not generating tax deductions. It's going to hurt business owners from generating Roths. Again, they're attacking Mr. Peter Thiel, but what they're going to end up attacking is mainstream American business owners. Peter Thiel doesn't care about backdoor Roth IRAs. He made his money on the investment. He didn't make his money on making the contributions. And again, I'm not defending Peter Thiel. I don't know him, but he didn't do anything wrong. He invested in 3 super successful companies that turned out to be major successful companies that employ hundreds of thousands of people across the United States. So it's not easy to duplicate Peter Thiel. That's why there's less than 500 or so people in the whole country that can do so. So it's not like there's millions of people like hanging around in bars, with secret language about how to push all this money in an IRA. It doesn't happen. It's not easy. He got super lucky. Yes, he's arrogant. Yes, he's a friend of President Trump, and I guess that's where we are today. Accredited Investor. Okay, this is the first of the 2 provisions I want to focus on. 138312 basically says that if you own any investment that requires you to be an accredited investor, that could be a private placement, private equity, hedge fund, venture capital, Reg A, Reg D, whatever it is, any investment that requires you to be accredited, you can't do it in an IRA. You can do it in a 401k, but you can't do it in an IRA. Now, to make matters even worse, what they're proposing, again, this is proposed legislation, is that if you have owned an accredited investor investment in the past, you have 2 years to get rid of it. That means you have 2 years to get it out of your IRA. Sounds fun, right? Now, we all know that private placement investments in most cases are illiquid. They're in private companies. Or they're in investments like hedge funds where there's lockups or private equity. So if you just did a private equity investment last year and there's a 3 or 5 year lockup, what are you supposed to do? You got to take a distribution and pay tax and a 10% penalty just to comply with these rules? That doesn't seem right. So what is this going to do? It's going to force people to push and invest outside of mainstream America. They're going to be forced to invest in publicly traded companies or maybe real estate. They will be significantly limited in what they can invest in. This is horrible for you and I, for Americans that want to diversify, Americans that want investments and choices. This is a horrible, horrible, damaging proposal. Number two, it's going to be horrible for small businesses who raise capital, who need to raise capital to grow. There's $11 trillion in IRAs. A good, well, I would say out of $11 trillion, 5 or so percent are invested in self-directed, and a good chunk of the self-directed market is focused on private placements. That means there'll be hundreds of billions of dollars that will not be available to be invested in private placements. I just spoke to someone today that said, hey, Adam, I'm supposed to be making a private placement investment into a startup in California. My buddy's a CEO. I own nothing of it. I'm going to put a few $100,000 in it. I'm not going to do the investment now. I'm going to wait. So guess what? That company just lost $240,000 of potential capital because of this bill. And how much more will they lose in the future if this bill gets passed? So it's significantly damaging. This is not going to help raise money, right? Let me back up, and I forgot to say, this is a bill to raise money, right? The proposed tax bill is part of a budget bill to raise $3.5 trillion for infrastructure and social programs. Okay, whether the bill ends up raising that amount or not, in final form, it's going to need to raise several $trillion. If you aggregate all the retirement account legislation, including the 138312 and the 138314, which talks about not being able to invest in any entity you own more than 10% of, that's private, or any entity you're an officer of, even if it's public, all the retirement legislations will only raise about $4.7 billion over 10 years, not 1 year. 10 years, okay? The accredited investor provision is only supposed to raise about $1.7 billion over 10 years. It's about $170 million a year. The 10% or officer, 138314, which I'll get to in a minute, that's only supposed to raise $42 million or so over 10 years, right? It's a joke. This is not about raising money. This is about limiting investor choices. This is trying to stop the next Peter Thiel, which, again, they have their cap. The cap will stop any runaway IRAs. So what are these provisions trying to do? It's trying to force Americans to make investments into publicly traded companies. It will significantly curtail our investment options. It was done intentionally. This is not a secret. This is not something that just slipped in. Yes, many congressmen and senators are not aware of it, but the writers of the proposals wanted this in for whatever reason. Again, it's not there to raise money, but it's there to stop you and I from making investments into businesses that will be hopefully the future of America. And it's going to significantly hurt small businesses and hurt businesses' ability to raise money and hire more Americans, which makes no sense, right? It goes against everything that we've been trying to do, right? President Obama, again, this is not a Democrat-Republican thing. He passed the Jobs Act, which really had support from the Republicans. What the Jobs Act was intended to do and has done in 2012 is raise and increase the ability for average Americans to invest in small businesses through expanding crowdfunding platforms and expanding the rules, making it less rigid. And it's helped, okay? It's a really good set of rules. This is going to basically stomp it from having that impact. It will severely disintegrate that provision by not allowing IRAs to invest in accredited investor investments, plus not allowing an IRA to invest in any investment the IRA owner owns more than 10% of, not 50. The old threshold was 50%. This is now 10%, or any business the IRA owner is an officer. So even if you're an officer of a publicly traded company, you own 0%, can't make the investment. So this is some big stuff. This is the biggest attack on the retirement system since 1974. I've always said that retirement accounts are bipartisan, right? Democrats, Republicans, there's always consensus. If you look at the Secure Act in 2019, there's consensus. People want to support retirement accounts, the ability for Americans to save and generate wealth in a retirement system. And unfortunately, that's under attack today. So I'll go through all these questions. If you scroll up to the comments, I just included summaries of those two provisions and also links if you want to reach out to your members of Congress or your senators and educate them, right? This is about education. I firmly believe that the members of Congress on both sides, as well as the senators on both sides, if they're explained the impact that these provisions could have on American businesses, small and big, as well as the ability for American businesses to raise money to hire more Americans, they will certainly support our position to have these provisions removed from any future tax bill. So these two provisions, again, 138312 and 138314, only apply to IRAs. They don't apply to solo 401ks or defined contribution or defined benefit plans. Only IRAs. Okay, so those are the two provisions that I really wanted to focus today's YouTube live on, because they're the most egregious and the most far-reaching. It can have the greatest impact on all retirement investors, and are also the two provisions that really are not getting much attention, right? Most people are focused on capital gains or corporate tax or individual tax or the carried interest or the estate tax. They're not focused on these two provisions that will stop Americans from investing in the next great Google or Uber or the next great American company. And that's just a shame. So it's up to us to do something about it. We're not helpless. We can make a difference. Trust me, if all of you watching will call your members of Congress, whether they're a Democrat or Republican, it will make a difference, right? Republicans are humans. They have friends on the other side of the aisle, and they talk, okay? And I've quite a few friends that are Republican congressmen, and guess what? They work out with their Democrats. They grab beer with their Democrat colleagues. It's not war. Most of them work together. They work to solve problems, and they work to negotiate. So if you reach out to your members of Congress or to your senators, even if they're Republican, educate them about these two provisions. Unfortunately, the cap, that ship has sailed. I do not think we're going to have much success protecting the cap. It's just, in this environment, very difficult to protect wealthy people, even though they're not billionaires. I have some clients that have over 10 million. They're rich, okay? They're successful. They're not billionaires, okay? They have jobs. They've been successful in their investing. They've invested for the last 25 years in retirement accounts. They've made some really good investments, but they've saved, and they've been consistent, and they're being penalized. But again, no one's going to have any sympathy for someone with 15 million in their IRA, even if they did everything the right way. It's right now a battle that I think we will lose. But if we focus on the two provisions, on accredited investors and private businesses, we could win. Okay, we can get these provisions removed. So let me, real quick, let me mention there's 5 members of Congress on the Ways and Means that are Democratic, that are part of a caucus that is all about solving problems, the problem-solving caucus. And I think they will certainly be more than interested in listening to our views. And they are, I'm just going to mention them, Ron Kind of Wisconsin. So if you live in Ron Kind's district in Wisconsin, reach out by phone, please. Stephanie Murphy of Florida, which is in the Orlando area. And I actually have an office in her district, and I've reached out. And she actually voted against this tax bill. So she voted against it, so that's great. Thomas Suozzi of New York, which is Long Island. So if you live on Long Island or have any friends on Long Island, please reach out to Congressman Suozzi. I'm sure he would be interested to hear from you. Bradley Schneider of Illinois, and he represents a district right outside of Chicago. Also a smart gentleman who I'm sure would be very interested in hearing from all of you. And Jimmy Panetta of California. So those are the 5 moderate Democrats on the Ways and Means Committee that we should be reaching out to and educating them about the detrimental effect of 138312 and 138314. So let me just jump through a couple of these questions, and then I'll try to get through some of these questions that clients emailed me separately. The net investment tax, I talked about it, it's going to expand to pass-through income. Do I recommend converting to a Roth IRA now? Yeah, if you make more than 450, convert this year because you won't be next year. If you make less than 400 or 450, you can do conversions. You should be able to do conversions in the future. That the conversion threshold generally will be only applicable to those making over the 450. Same with the backdoor. Does this impact single-member IRA LLC setup? So, Tom, great question. So, 138314 says that no IRA can invest in any entity where the IRA owner is an officer. So, if you're a manager of an LLC, technically you're an officer. So, unintentionally, 138314 does target checkbook controls. It's not the intent. The intent is to stop Peter Thiels from investing in founder shares in their IRA, right? We know that's the intent. But the way it's drafted, and it's super broad, it even applies to publicly traded companies, it will capture single-member LLCs. But again, there are solutions, right? You can have someone else serve as the officer. You can have IRA Financial serve as the officer. So there's ways around it. Checkbook control will survive. It will continue to prosper. This is not the intent of this provision, right? The Ways and Means and the Democrats understand that people want to own real estate in a single-member LLC. They understand that Fannie and Freddie Mae will only lend money to an LLC, not directly to an IRA. They're not trying to attack this. They're trying to have stop people from dumping founder shares where they own maybe less than 10% like a Peter Thiel, or they're an officer like a Peter Thiel, and stopping them from using their IRA to buy those shares. That's what they're trying to attack. But again, it's drafted so broadly that it's going to pull in Checkbook. But again, there's solutions, and we will address those solutions if these provisions get passed. But I wouldn't worry about Checkbook control. Are there any provisions of the bill that require private placement sponsors to honor redemption requests for IRA investors? No, they don't have to. I don't foresee them being able to do that. So no. Which is disastrous, right, for IRA investors. Again, I have private equity investors. I have private equity investments myself, not in an IRA. There's a lockup. So if I did that in the IRA, I'd be in big trouble, right? I'd be forced into taking taxable distributions and maybe not have enough money to pay the tax. Can you conceive any workarounds that would allow IRAs to invest in private placements? Yeah, so what will be the workarounds? God forbid this gets passed. Reg A Plus. Reg A Plus is a type of private placement that allows for unaccredited investors, which will allow you to do. There's a crowdfunding reg that allows for a business to raise up to $5 million without accredited investors. So there will be workarounds. You may not be able to invest in the full spectrum of accredited investors as we have today, but you will be able to make that investment in somewhat limited form. Can you explain how this might also impact solo Roth? So solo 401ks are not impacted by the accredited investor or that 10% owner threshold. They are subject to the cap, and they are subject to the mega backdoor Roth, but they are not subject to the accredited investor or the 10%. So solo 401ks will be the big winner, along with defined benefit plans. If these provisions, again, in draft form, God forbid, get passed, you will be able to do so in a solo K. Any tax death course? Yeah, don't die. Wait a couple of years till someone else gets in office, or do a lot of estate planning today, because we know the unified credit exemption is going to be reduced from 11.7 to 5. If that is the case, that's a big reduction. How does the estate tax work? Well, I did ad bits on this. Let me just quickly say, when you die, no matter how much money you have, 100 billion or a dollar, it all goes to your spouse tax-free. When your spouse passes, that's when the estate tax kicks in, and then you're able to use the unified credit, which is now 11.7 times 2, to reduce any estate tax, meaning any assets above the 23.4, if you're married, will be subject to an estate tax of approximately 40%. But again, there's ways to circumvent those rules through irrevocable trusts and other types of trusts that an estate trust lawyer can assist you. So this is a really good time to get that going if these provisions pass. But either way, I would consider looking at that now in any event. We have an LLC with Checkbook control. He set up for us, owns rental property. Can we keep our rental in our IRAs? Yeah, you can. Again, if this passes, we'll just amend the LLC so someone else will be the manager or spouse or us, and you'll be able to do what you need to do and keep it going. So same with cryptos in an LLC. The LLC, the Checkbook control, will not die. We'll just have to change the officer to someone else or to IRA Financial, and you'll still have access to your bank account and be able to get things done. Again, that provision is not there to attack Checkbook. It's there to stop founder stock. Good. Sound is good. Thank you. Are we reaching out to other trust companies? Yes. Our industry is united. Okay. We have a great industry. We have great members. There are so many amazing companies in our space. We are all together. I was on a call with like 20-something trust companies today. RITA, Retirement Industry Trust Association, is our trade organization, and they're wonderful. And they've been doing this for 15 plus years. They have amazing resources, amazing connections on the Hill. They actually have spoken to the people that have written these two provisions. So we're aware of everything. We have lobbyists, and we're united as an industry, and we are fighting as an industry to get these provisions removed, not just for us, but for everyone, for you, for small businesses who want to raise money to grow and to hire more of us. All right, that's the whole idea. This country is built on small businesses. 68% of all jobs are jobs at small businesses. Okay, the country is built. Facebook didn't start with 40,000 employees, right? It started with a few, and that's how all these great companies grow. Not all of them make it, right? But it should be our right and our option and opportunity to be able to invest and make a difference and be a part of the next great American business. And these provisions are going to remove that opportunity, and it's super hurtful. Our self-directed IRA is canceled. This passes as is. No, right? Again, you'll still be able to do Checkbook. You can still do real estate. You can do precious metals. You can do cryptos. You can do hard money loans. You can do unaccredited type of investments. You just can't do accredited investments or any investment that you are an officer of or you own more than 10% of privately. That's it. Otherwise, you can still do it. Now, is this bill good? No. Okay. I'm not talking about any of the other provisions. I'm talking about these two provisions, 138312. 138314, they're not good. They do not help the self-directed IRA industry. Yes, this is an advocacy Ask Adam. I am not objective, as you know, and I don't think you are either. But at the same time, I hope that if I was just an objective individual learning about this industry, I would not support these types of provisions because, again, they don't raise money. They don't help anyone. There's a cap, right? Even let's say we're all smarter than everyone else and we're able to somehow figure out a way to dump founder shares into our IRA and make hundreds of millions of dollars. We can't do it anymore. There's a cap. So what are they worried about? Does the income of 450 include ordinary income? Yeah, it's modified adjusted gross income. So whatever that means, income, capital gains, whatever income that passes through to you needs to be under that 450. So for some people, it's not going to be doable, right? I spoke to someone today that says, hey, Adam, I got like 7 million in an IRA. It will ultimately get to 10 in the next 10 years or so. I know it. But I make a lot of money. I'm a successful guy. I don't think my income will be under 450. So maybe I can file separate, have my wife take some of that income, but as of today, I can't do it. I spoke to someone else not yesterday, today's Monday, on Friday, that says, Adam, I have more than 10 million in an IRA with you. And I'm going to be able to have my income under the 450. I'm retired. I don't need to, I don't take any income, and I can have my investments. I don't have to collect on my investments. I can live off the IRA and work off that and keep my income under the 450. So that's just the way it is. Some people will help, some people won't. Peter can't just withdraw now tax-free, couldn't he? No. Peter Thiel. This is all about Peter Thiel. Believe it or not, one person is really directing public policy. It's crazy. Again, I don't want to get into politics, but this is crazy that one person so many damn enemies, and has created this snowball effect that's a tsunami against IRAs. It started with the ProPublica article in June, and this is where it's led to. Peter Thiel is under 59.5, so they're going to tax him on all his income that are not Roth contributions. So any of the earnings on his Roth IRA investments, which is everything, right? I think he started with like a few $1,000. So if he has 5 billion, then 4.999 will be subject to tax over the next 2 years at income tax levels. Probably no 10% penalty, but he's going to pay tax over 2 years on 4.9 billion. So I guess that's going to be less money for him to spend on Republicans, which will probably make some of these Democrats happy. Again, this is not a political thing. I don't want to even go there, but Peter Thiel is going to have a nice tax bill. So, sucks for him. So yeah, I'm at the self-directed stuff, Philip. Again, the big two provisions, 138312, 138314. Accredited Investor is no longer available for IRAs if this passes. Any investment where you're an officer of or you own more than 10% of, you will not be able to do. This will not impact ROBs. ROBs are 401ks. This does not impact 401ks. This only applies IRA. Is there a tutorial for step-by-step directions how to set up your Roth IRA account with Gemini? Yeah, I'll do another podcast. I want to just focus on the tax bill and the proposals. But hit me up separate. It's super easy. You can go in our app and just click the Gemini option and it'll get taken care of. Rental property, again, single member LLC rental property, how does it impact you? We're going to have to change the officer. You can't be the officer, so you're going to have a spouse or IRA Financial Service as the manager of the LLC. You'll still have access to the bank account, but we will serve as the officer. Okay, let me go through some of these questions that I got clients because they were really good ones. You would be prohibited from holding assets that require accredited investor status with IRA funds. For example, you couldn't use your IRA to invest in private placements. For those who establish LLCs, the LLC is the actual investment owned by the IRA. It does not require accredited investor status. No, that's not right. When an LLC makes an investment, you have to look to the beneficial owner of the LLC, which is the individual. So you would have to certify that you're an accredited investor. Your IRA will no longer be able to make those investments. That requires your accredited investor certification if this bill passes. The next question. This reduces the 50% threshold to 10% of controlling and interest in an entity to be able to invest your IRA in that entity. If you own 10% of a business, you can no longer invest your IRA in that business. That's correct. Does this impact Checkbook IRA LLC setups? Yes. As I mentioned, the IRA owns 100% of an LLC that you are an officer of. You will no longer be able to be an officer. You can have a spouse or a third party like IRA Financial or a friend serve as officer, but you'll still have bank account control. So don't worry about checkbook control. Checkbook control will survive and prosper, but private placements would not. Many of these private placements have minimum periods of time during which redemption requests are not allowed. And even after such period has been satisfied, the funds are not always readily liquid and available for redemption, which I would imagine would become a real issue if this provision is passed and statistically a significant number of the private placement investors are IRA. Are there any grace periods beyond 2023? No. Are there any provisions of the bill that require private placement sponsors to honor redemptions? No. Can you conceive of any workaround that allow IRAs to somehow still be invested in private placements in which they are already invested prior to the enactment of the bill? Or are there any strategies for reassigning the ownership? Yeah, honestly, you have a couple choices. Take a taxable distribution, probably no 10% penalty, maybe, I don't know. We don't know what's going to happen. Not a great option. Or sell the investment to a non-disqualified person, right? A friend, aunt, uncle, brother, sister. You can potentially maybe do a kind of like a forward contract where, let's say you think the investment into the private company is worth, fair market value is 200K. You can say, listen, I'll sell you this for 300K. Anything above 300K you keep. Anything at 300 I keep, right? So there'll be ways to structure these transactions to get them at your IRA, have someone take them over without giving you cash, because again, not everyone's going to be able to find a buyer that will have the cash necessary to cover the cost of the investment or the fair market value. So there'll be some clever workarounds. It's interesting. This is not a prohibited transaction provision. They slipped this provision under 408. What is 408? 408 is the provision that creates IRAs. So they're basically saying this. If your IRA invests in a private placement, it's not an IRA. It doesn't exist, right? So forget about whether it's prohibited or not. Your IRA is dead. It never existed. So they are not messing around. They did this on purpose to essentially say, your IRA can't do this. And if you do it, it's not a question of prohibited or not. You're done. There's no IRA. So again, they are very focused on making sure IRAs cannot invest in private placements or not invest in private businesses. This is a direct attack on the Peter Thiels of the world. No investment into the next Facebook, no investment into the next PayPal, no investment into the next Palantir in your IRA. Yeah, you can do it in your 401k. Why? Well, a couple reasons. Pension funds, right? We all know pension funds. They got a lot of money. Well, we'll let them do it, right? We need their money. The California pension system, lots of money. Well, they're going to be able to still do private placement investments, okay? 401ks will still be allowed to do it. Maybe not readily available in many 401k plans, but solo 401k, yes. So again, the workarounds will come. There'll be Reg A plus for future. There'll be crowdfunding investments for future. But for individuals that have investments in private placements now, taxable distribution will be one option. Not a great one, clearly. Got to come up with the tax. Yes, you have 2 years to figure this out. I think you'll see people try to sell it to friends in terms of like forward-looking contracts, installment sale contracts, sophisticated contracts, smart contracts where you'll say, listen, this is valued at, let's say, 300, or maybe it's 500. Whatever the value is, you give a cushion, and you say, listen, I know you're doing me a favor, I'll hook you up, but give me what it's worth, what I think it's worth, and whatever on top of that, you can keep, right? So let's say you paid 150 for it, you think it's worth 200 now, and you maybe think it's going to be worth 300 in 3 years. You tell your buddy, listen, I'll sell it to you for a note for 310, 320, whatever on top of that 320 is yours, whatever up to that 320 goes to my IRA. So there'll be workarounds. You're seemingly not going to be able to sell it to a disqualified person, but no one knows. Maybe they're going to let you sell it to a disqualified person to get it out of the IRA. I don't know, but how could you, right? Because then the IRA can't own it. So it's basically going to have to go out of an IRA. Can you sell it to your wife? I don't know, because that would be a prohibited transaction, but maybe they will allow that since they're forcing you to do this. We don't know. There's not a lot of substance. As the bill stated now, and I've read the full bill, it doesn't seem like it discusses disqualified person. All it says is that if you have these investments in your IRA, the IRA is no longer valid. So you're going to need to get it out. Can you give it to your spouse? I doubt it. Can you sell it to your friend or a brother or sister for fair market value on a forward contract basis? Probably. So there'll be workarounds. There's 2 years. God forbid this gets passed to get it out. I know that's not very comforting to some people that own a private equity or venture capital investment where there's a 4 or 5 year lockup. It's not going to help. And then the issue is, hey, we know the vultures out there. What are people going to do? They're going to say, oh, Adam, I know you own this in an IRA. I know this bill, it got passed, sucks for you. Guess what, Adam? I'll give you 60 cents on the dollar. Take it or leave it. You may not have an option. So this is super damaging. Again, I'm shocked that this got in the bill. I'm even more shocked that this 2 year look back is there. It's actually maybe in hindsight a good thing, because I think when you talk to people and educate them and you mention this 2 year window to figure this out, it's something that people just shake their heads and be like, wait, that doesn't sound right. You sure? Can they really do that? Other people have mentioned the constitutionality of this. There's a very broad I would say, a broad level of playing field they have when it comes to budget reconciliation. You saw today that the immigration language couldn't get in there, but our lobbyists and attorneys are basically saying it's not going to be easy to argue constitutionality, that this is not part of the budget reconciliation. This is something that should not be part of it. So I don't think that's a winning argument. Good question. What's a Reg A fund? A Regulation A fund is a investment that, if it satisfies certain requirements and there's registration with the SEC, you can solicit accredited investors. Who is an accredited investor? I should have said this on the outright. I'm so sorry. Who is an accredited investor? It's someone that makes $200,000 a year, single. Someone who makes $300,000 a year, if you're married, file jointly. Someone who has $1 million in net worth, excluding your primary residence, or someone who has certain credentials, i.e. they work in an investment firm, or they have a certain series license, like a Series 7. So that is someone, those are the credentials that make up the accredited investor rules. So 138312 is saying any investment that requires you to be accredited, like a Reg A or Reg D, which again is a type of regulation that allows the promoter of the investment to file certain documents with the SEC, to have potentially audited financials, in this way allowing them to solicit not just friends and family, but to open their solicitation to the public, right? It's like mini IPOs. Instead of doing like a formal IPO with the SEC, these Reg A and Reg Ds are like mini IPOs where you can raise 10, 15, 20, generally up to 75 million bucks potentially, without more established regulation and SEC requirements. So they are very, very, very popular ways for small and growing businesses to raise money. And they target accredited investors. Now, we can argue whether the accredited investor rules are even fair, right? Who's to say the government should decide who is allowed to make investments or not? It's my money. I earned it. Just because I don't make 200 grand, maybe I went to Harvard Business School, or I have an engineering degree from Harvard, and I make 160 grand. So I can't do this investment. That's beside the point, right? Whether you agree with these rules or not. The bottom line is 138312 says any investment, Reg A, Reg D, private placements, private equity, hedge funds, venture capital funds, anything, loan funds, real estate funds, crypto funds, anything that requires you to be accredited, if this passes, you can't do it. Not only that, if you've done it in the past, like today, you have 2 years to unwind it. And if you don't, your IRA is dead. It's gone. Finito. So you got to figure out a way to get it out. You can pay tax if you get it out, or you can find some sucker to buy it from you, and they're going to obviously offer you less than fair market value for it because they know you're under the gun and you have no leverage. And then the second provision, the 138314, says if you own more than 10% of a business, you can invest, even though the prohibited transaction rules are 50%. Or if you're just an officer of even a publicly traded company, you can invest. So imagine you're an officer of like some biotech company, right? It's got like a $700 million market cap, so not even a huge company, but good sized company. You're an officer, can't invest in it, even $1 with your IRA. So again, what they're targeting are Peter Thiels, runaway IRAs, but they have the cap. So what are they worried about? No one could get over the 10 million. So the next Peter Thiel is not going to appear anytime soon because of the cap. So that's what we're dealing with. It's Peter Thiel. It's a number of other wealthy people, but it's only 497 people in the whole country have over 25 million. And again, who's to say that's too much, right? Who's to say what's too much? Is 10 million too much? Is 25 million too much? Is 100 million too much? Who's the judge of that, right? IRAs are subject to estate tax. So it's not like Peter Thiel. Again, he's a bad example because he wants to move to New Zealand and basically screw everyone. Okay, he's not a likable character. He's not. He's arrogant. I don't know him, but I've seen comments. He doesn't care about anyone. He just wants to basically live on an island in Hawaii and have a bunch of servants there and serving him. He's not the best guy. He's not an easy person to defend. And that's just the bottom line. And he supported, Trump, who the Democrats, for lack of a better word, do not like. So you add that all together, that is a tsunami. That is, something that we're trying to, stay alive fighting. Timing, as I mentioned, this passed the House. It's going to the Senate. The Senate is not going to allow any type of rework of it. There'll be no commenting or markup. And then it's going to go back to the House, and it's going to go to debate for the House and Senate. And then ultimately it's going to be prepackaged and put together. The Senate version, the House version will be agreed on. It will be sent to the president for signing. Some people say, hey, this maybe get pushed to 2022. I don't think so. This is getting pushed this year. This will get done this year. It may not be a $3.5 trillion bill. It may, again, Senator Manchin said, maybe 1.5, maybe 2 trillion. It's going to get passed. The Democrats need to get this infrastructure bill passed. It's political suicide if they don't. They have the ability to do so. They have control of the House, the Senate, and the presidency. They will work with moderates. So again, we have opportunities to work with moderates who I think need to be educated, want to understand, they want to listen. These are members of Congress and the Senate who are interested. They love America. They love this country, and they want it to prosper. So I believe that these two provisions will have a negative impact on our ability to grow as a country, to help our companies, our U.S. companies, compete around the world, especially with China, and keep hiring more and more Americans in this, in our country. So I'm confident that if the moderate members of the Ways and Means or senators hear our vision, our thoughts, we will be successful and we will be able to remove these provisions. Our industry is committed. We do daily calls with ourselves, with our teams, with our lobbyists. I was on the phone with the senator today. We are certainly motivated and energized to get this done. We would love your help, whether you're listening or watching now. If you're watching at a later point, you can help. Every phone call or email to a member of Congress, to a senator, helps, whether they're Democrat, whether they're Republican, whether they're a member of the Ways and Means, whether they're on the Senate Finance Committee. It could help. It doesn't matter. You can all help, and please, we would love your help. Okay, so if you have a few minutes today or tomorrow, pick up the phone, make a call. You'll get someone. I've called, I live in Florida. I've called my senators, I've called my members of Congress, and I've spoken to all of them. Okay, it's taken some days to get to them. If I haven't spoken to the actual congressman, I've spoken to their chief of staff. They want to listen to the constituents. They do. They will listen and they will talk to you. They need to be educated. They're focused on the big stuff like capital gains and corporate tax. They're not focused on this stuff. They're also focused, obviously, on non-tax issues like immigration and health, which we all feel very important issues that we want to address. But these are also important to us. If you like Peter Thiel, yeah, it's not a popular person to like very much. Okay, when will we know if it's passed? Oh, you're going to know, I promise. I'll let you know. I'm going to do weekly updates. Some weeks I may not have a lot of updates. If you subscribe to the channel, because there'll be YouTube Live notifications, you can also listen to my weekly podcast, Adam Talks, each Wednesday. You can pick it up on Spotify or Apple or SoundCloud, wherever you pick up podcasts. It's called Adam Talks. I've done like 200 and something episodes over the last 3 or 4 years. I'm going to do one on Wednesday on a status on what's going on. So there'll be some new info because, again, tomorrow and on Wednesday, we will be talking to various members of Congress and some senators. So hopefully I'll have an update. I don't think we'll know anything for 4 to 8 weeks. I'm very upset about this too, honestly, my friend. I'm so upset. I haven't been able to sleep in like a week. I'm barely eating. It's not just, obviously, subjectively, it's upsetting to me because this is my passion. This is what I love. But someone, again, as you guys may or may not know, I was born in Canada, okay? I always dreamt about coming to this country. This is the greatest country in the world. And what I loved about America is the freedom, right? The opportunity that we all have to make a life for ourselves, to be successful, to build a future for ourselves and our family. And that's been like, and that's something that, always resonated with me. Canada was definitely more socialistic. It was more, getting everyone in the middle. But guess what? I just looked at the numbers. Canada has a lower capital gains tax. It's going to have a lower corporate tax. It's going to have a lower estate tax. It still has a higher income tax. It has zero restrictions on retirement account wealth. It is more flexible in terms of borrowing from your retirement account. And we live in America, the United States of America, and it's starting to look more like Finland. And that's troubling to me because, again, I love this country. I love what it stands for. I was always jealous of America, growing up in Canada. I always dreamt about coming to this country. And then when I went to law school here and married an American and got my citizenship, it was the happiest day of my life. Like literally, like having kids, being American was getting my passport and like the pledge, and I actually got to lead the pledge. It was like I started crying. I was like so excited and happy. And I still love this country, but I am saddened by what's going on. And this is not a knock on Democrats. I voted Democrat. I still am a liberal guy. I can live with higher capital gains tax a little bit, a higher corporate tax, higher individual tax. Like I understand we got to pay for some of these policies. Like okay, I got it. But to cap people's wealth, retirement wealth, right? It's not even saying to like Amazon, like oh or Apple, you made too much money this year. Like you made $1 trillion. Like it's too much, right? This isn't even anti-competitiveness or antitrust. This is telling an individual that hey, you got $10 million in your retirement account. Sorry, you're too rich. Give it up. Or sorry, you're not smart enough to make accredited investor investments. Sorry, can't do it in your IRA. It's upsetting. And that's why I'm confident that once we educate members of Congress and senators, they will come to their senses and realize that this legislation is not helpful. It raises zero revenue or very limited revenue, and it's actually hurtful. They're kicking the people who are working so hard to succeed right in the face. Yeah, and they're changing the rules in the middle of the game. Yeah, everyone, they've told us from the day one, save, right? Here are the retirement accounts. They created IRAs in 1974 with no cap. They created Roth Iras in 1997, no cap. Created 401ks in 1974, no cap. And now, 47 years later, they're saying, guess what? Sucks. Sorry, you're too rich. A couple of you guys, there's 500 Americans that have 25 million. We hate all you. Not fair. You're too rich. And even though you did it potentially legally, because we haven't been able to find anything illegal, we would have, if we could have audited you, we never did. And they can still audit these people, right? So, sorry, too much money. And guess what? There's this guy, Peter Thiel, out there that we really don't like, and he's got $5 billion bucks, and we're going to tax $4.99 billion over the next 2 years and punish him. And that's good enough. Because again, we're only talking 497 people. There's only 28,000 with more than 5 million. So between 5 and 25, let's say there's 5,000 people, right? Under 10 million, over 10 million, excuse me. Let's say there's 5,000 Americans. I haven't gotten an exact number, but Senator Wyden knows the number. Let's say there's 5,000. Now, he probably doesn't want to give you the number because he knows it's a laughable small number. Let's say it's 5,000. That's pretty conservative. Are we really dictating policy for 5,000 people? Right? Is that what's going on? We're going to change the retirement system for 350 million because there's 5,000 people who did well in their IRA. They bought Bitcoin 10 years ago or bought Tesla 7-8 years ago, and they made a lot of money, or they invested in Uber or Robinhood as a private business, and now they have 10 million bucks, and we're punishing them. Doesn't seem fair. So yeah, if we become managers, no, we won't have any access. We will simply be the officer. We'll draft language where you'll have to get consent to, let's say, make investments, things like that. But you'll have control over the bank account. You'll be able to get done what you need to get done, but we'll take care of all managerial or officer responsibilities. Again, they're not looking to stop single-member LLCs doing real estate or doing IRS-approved investments. They're trying to stop founder stocks, right? They're trying to stop Peter Thiel from investing in Facebook as an officer, Peter Thiel from investing in PayPal when he owned less than 10%. That's what they're trying to stop. But they have the cap, right? So there's no need to even go to these 2 steps further. They have the cap at 10 million. So why do they need these? And that's just the bottom line. So let me get through a few more questions. It's been an hour. I'll do one every week. One of these every week. I'll also check out Adam Talks on Wednesday. Drops every Wednesday, around Wednesday late morning, early afternoon. For an update, it's usually about 10-15 minutes. So you can check in and get a quick update to where we stand. Good bridging token was given anyone who used the AVAX bridge previously without consent. Why should we do now at the future for such airdrops? Again, if you have under 10 million, it doesn't matter. You're fine. You can buy cryptos in an IRA. If it's a private placement, then we need to talk. Why pay taxes on the money when we take it out of the IRA or through death tax? It's about punishing the middle class. Yeah, Joe, you're right. They're going to get it through estate tax. This is about punishing the middle class, even though that's not their goal. My belief is the goal is, again, punish Peter Thiel and the Peter Thiels, and really there's a push to gather all Americans in the middle, right? The goal of this legislation, seemingly, is to get all Americans buying publicly traded stock, getting everyone between 4 and 6, 7% returns, and not having too many rich people, not too many poor people, and getting everyone stuck in the middle. That seems to what's happening. We know that's not realistic. That's not how countries work. There's a gap. We are an amazing country. Yeah, there are rich people. We have a great social welfare system. If there's people that don't have money for healthcare, for food, we have food stamps, we have Medicare, we have Obamacare. Are we perfect? No. Okay. Is there a growing gap? Yeah. There's ways we can fix that. The retirement system is the way to fix it. That's the problem. If we educated young people to save and say, listen, if you do this, if you put money in an IRA or 401k, start at 23, at 50, you're going to have 3, 4, 500 grand, right? And you can do all these cool investments into private placements. That's going to attract young people. If you tell people, guess what, young people, we tend to change the game as the game is played. We want to just change the rules anytime we want. We're not going to let you do any private placements or any type of investments that you may find interesting. You're just going to be able to buy stocks or mutual funds or maybe cryptos. They may say, you know what, who needs this? I'll just invest. I'll save the money personally. I'm not going to be a part of your retirement system. You're a joke. You're changing the rules on me. I don't know what's going to happen in 20 or 30 years. What's the point? I'll just save it personally, and this way I can take the money when I need it. Again, these people didn't save their money and steal it and put it in Switzerland, right? We're not talking about tax cheats. No one's cheating taxes. Everyone followed the rules, even Peter Thiel. He got under audit and survived audit. The IRS could have attacked him. They could attack any of the 497 rich people, so to speak, that have more than 25 million in IRA, but they obviously haven't, or for some reason haven't been successful. So what they want to do is just cap everyone. And on top of that, forget about the cap. We also want to punish middle Americans and not let them, middle class Americans, buy any type of private placement or any investment that they could do personally. So it's going to take money out of the retirement system. It's going to de-incentivize people from saving in the IRA and save or spend personally. Maybe that's their goal. But people will have less money in a retirement account because they're not going to trust the system, which is a shame because the system works. There's bipartisan support. The time value of money, tax deferral, compounding returns are great principles. And unfortunately, they're chipping away at its benefits and hurting all of us at the same time. So, I'm super upset. But again, I'm hopeful. I am very hopeful that these proposals will be defeated and we'll be able to make these investments in the future. Would Roth distributions be taxed at capital gains? No way, they're ordinary income, right? That's great. That's what's going to happen. All Roth contributions, all conversions should be distributed tax-free. The earnings on the Roth, if you're under 59.5, will likely be subject to income, not capital gains, income tax, and will also be potentially subject to a 10% penalty, although I don't think so. And yes, could they keep moving the cap down? Who the heck knows, right? In a million years, I never thought this could happen. Senator Wyden in 2016 proposed a cap, and it was basically like laughed off the floor. There was, the Senate was controlled by the Republicans, so it was never going to go anywhere anyways. I think, well, actually, the House was controlled solely by the Republicans, but it was a non-starter. Like, everyone laughed in his face. Guess what? In 2021, he's getting the cap, and not just on Roth IRAs. In 2016, the cap was proposed only on Roths. Now the cap is on all IRAs, which you're probably saying, Adam, that makes no sense. That's short-sighted, right? IRAs grow in value. Once you hit 72, you take the money out and pay tax. Why the heck would they cap it? It's also subject to estate tax. Why in God's green earth would they cap it? Well, they need money over the next few years to pay for the infrastructure and the social programs. So guess what? They don't care what's going to happen in 20 or 30 years to our country. They're not long-term thinkers. They're thinking about the next 2 or 3 years to pay for these programs. That's just the bottom line. Yeah, I'm in favor of a lot of these infrastructure. Our country's a mess. Our airports are a joke. Right? If you go into Europe or Asia, I mean, we can't compare from an infrastructure standpoint. Our bridges are falling apart. So I support many of these infrastructure projects. I just don't support a cap. And unfortunately, these provisions don't even raise any money, right? 4.7 or so billion over 10 years. These two provisions only support 1.7 billion or raise 1.7 billion over 10 years. So not a lot of money when you compare to a $3.5 trillion bill. So that's it. Again, it's not a political commentary. You can be a good-hearted Democrat. I have just spoke to someone today who's a Democrat. He fundraises for Democrats. He owns a real estate investment fund. He gets money from accredited investors. He is against these provisions. He supports the tax bill in general terms. He supports increased taxes and corporate capital gains, individual level. And he's a huge fan of Biden and Democrats, but he's against these provisions. So you can be, these provisions, you can be against them, whether you're a Democrat, Republican, Independent, or whatever. Like, they make no sense. That's the bottom line. So our job is, let's educate our members of Congress. If you scroll up top, there's a link to reach out to your members of Congress. I'm going to just repeat. Ron Kind of Wisconsin, Stephanie Murphy of Florida, Thomas Suozzi of New York, Bradley Schneider of Illinois, Jimmy Panetta of California. These are the 5 moderates on the Ways and Means that if you are a constituent or you know someone who's a constituent in their district, please reach out to them. Educate them, okay? All we need to do is educate people to the benefits of the use of retirement funds to fund small businesses. Let's educate, let's make these members of Congress, these senators, aware of the value of using retirement funds in private placements and private businesses. And I am confident we will make a difference and we will get these provisions knocked out of any future bill. So again, thank you so much for watching. I know it's kind of late or wherever you are. Probably have other things you'd rather do. I know no one wants to deal with politics, but this is super important. We're under attack, all of us. And again, I don't think enough members of Congress or senators understand what's at stake. So please help our industry educate and make aware the harmful impact these provisions can have, not just on investors, but on American businesses, on American workers, right? 65% plus of all employees are employed by small businesses. This will take money away from mainstream America, from businesses in our neighborhoods, from the local dry cleaners to the pizzeria, to the consulting firm, to the new next great Uber or Instagram, Facebook, or whatever it is, money will be taken away from them. There's $11 trillion of IRAs. There's a lot of money at stake that could be employed to help fund amazing growth companies in this country. It will hurt us competing with companies across the world like China if these provisions get passed. I promise you. So let's do our part. I promise you, if we get these provisions knocked out, like, I will throw a freaking party for all of us, and you come down to Miami, and drinks on me. I promise. Let's work together. Let's get this stuff done, and let's save our country and save everything. Save our ability to invest and our freedom to invest in things we want to invest in. So that's it. Thank you guys and ladies for watching. Check out Adam Talks every Wednesday. Also, you check out Ad Bits every Tuesday. I'm doing also some weekly, like I did a weekly podcast on Accredited Investor, a weekly podcast on estate taxes, just trying to give people general information on various tax, legal, and IRA information and hot topics. So let me use my tax and law background to hopefully help all of you become better investors. So thanks again. Let's keep fighting. We will win. Let's keep our heads up. Let's keep going, and let's stay positive. And any way you can educate friends, family, please do. If you're on social media, send a tweet out, send them a Facebook message, make an Instagram post, forward a video, forward a link to this YouTube channel. Whatever we can do to make a difference. Our industry's united. Yes, we are all competitors, but every one of us are in this together, and we were going to work our tails off to educate people in Washington about the detrimental impact 138312 and 138314 in the proposed House Ways and Means tax bill can have. If anyone wants a copy of the bill or a summary, let me know. You can email info@IRA Financial. And I will. I'll send you guys a link, or I'll somehow post it on social media so you guys can see it. But there's a lot of stuff to digest, not just retirement stuff. But again, this is not just targeting the rich. Yes, a lot of the tax increases are going to impact people over the 450. These provisions are going to impact anyone with a retirement account. Will be impacted. Whether you have $5,000 or $50,000. You will not be allowed to invest in any business you own more than 10% of personally or are an officer of. Even if it's your buddy's next blockchain investment company and you want to just invest 30 grand and you are an officer, you can't do it. If you are a 12% owner and you want to invest 60 grand in this company, you can't use your IRA. If it's a private placement of the next amazing company and you don't have money in your bank account, but you have money in an IRA, you can't do it. And that's not fair, and there's no reason for it. It's not going to raise revenue. It's not going to protect any investor from fraud, and it won't stop the next Peter Thiel. Why? Because there's already a cap. That cap will go live. So there you go. Those are my 2 cents for whatever it's worth. But again, please, anything you can do to help us, our whole industry will be grateful. And if we get this thing knocked out, promise you, come down to Miami. I will do a party for all my clients, drinks on me, and we'll have tons of fun and celebrate. So thanks again for watching. Thanks for listening. Thanks for all your support. Really appreciate it. And I'll do a weekly update so we can chat and send. If you have questions, you can send questions to info@IRA Financial, or if you have my email, just shoot me an email. Talk to everyone or leave a comment on YouTube and they'll get to me. Thanks again. Really appreciate you guys watching. Thanks so much. Be well, be safe. Thanks.